Okay, welcome to the weekly roundup with Scott and Ben, the Hart Investment Group. I'm Scott, that's Ben. It's May 19th, 2023. And we're just rolling into the long weekend here, eh, Ben?
Yep.
Just,
Yeah, I think so. It's a long weekend in Canada.
Yeah, just let everybody know here. Our office normally holds about 60 people, and we are definitely the last team in here on a Friday and a long weekend. Nobody here. It's a ghost town. So we're working hard for you.
Yes.
Well, everyone else's advisors are already on holidays and have been for most of the day.
On the golf course.
Little plug. Okay, well, let's get it kicked off. Give us what happened. Give us the update of the week.
Lots still going on, but I think the primary thing was earnings this week. I think that we had lots of companies come out with earnings. A lot of retail companies missed their earnings expectations, guiding lower. Foot Locker had theirs last evening or this morning, I believe, and the stock was down pretty hard. But if you follow some of the videos I've started to do there and the charts we've been putting out, I think we put out the retail chart there yesterday, shows that the consumer is effectively in a recession. Something that I think we've been saying for quite some time. The other data to support that is savings rate went up. So people are spending less and saving more because they're concerned about where we are in the economic cycle. We've raised interest rates at the fastest point in history, makes sense. So people are concerned about where we are in the cycle. Continue to have pressure and concerns in the US regional banks. So we still watch that. The banks have been chopping around quite a bit here. Why does this matter is effectively, the lifeblood of the US economy is small business. Small business is primarily banked at the regional banks in the US. So that'd be kind of 500 employees and less. And that works out to be about 50% of GDP in the US. So, if you start to squeeze all these things, you get a slowing economy, which we've been saying for some time. And so I still think that's the case. Growth and inflation continue to slow, and nothing really materially changed different this week to tell me otherwise. There was a slight uptick in inflation in Canada that got everyone a little bit excited that the Bank of Canada would raise rates next month. I still think that has a 0% chance of happening.
0% chance. That's pretty low chance.
Yeah.
Yeah, go ahead.
I think we'd have to see something materially happen between now and then. I think it's April 12th is the rate announcement in Canada. I don't see a lot of data that would tell us that rates are going to go up. I think we're hold still.
All right, I'm just reading some headlines here too. Fed Chair Powell says rates may not have to rise as much as expected to curb inflation.
Yeah, the forward market, like the market that views where rates are going, still thinks that there's rate cuts in the back half of this year. I 100% agree with that view. I still think that rates get cut this year. And it's on the back of all of these things that we're seeing today, which is consumer squeeze, retail numbers are slowing, companies are guiding down. From a stock perspective, that's historically been a reasonable time to look at buying those stocks, right? Where if we think back over the years in 2015, similar kind of numbers, certainly in 2019, 2020, similar types of things happen. We get these big downward revisions. These companies guide lower, their stock gets beat up. All of those things tell you that it's a reasonable time to think about what you want to do here, assuming you're happy with what you're paying for a stock price. But we'd be looking at those names. I think I mentioned last week, I think Capri and Under Armour, and I think PayPal had a miss on their earnings this week as well. You look at these businesses and say, what's the overreaction here? Or is it one, or is there something worse happening? The other name that revised lower this week was Lightspeed. Lightspeed's a competitor to Shopify. But if you look at their profitability, it went up. Obviously in a slowing economy, people don't like that kind of market. Only about 30% of their revenue is reoccurring, but Lightspeed might be something worth looking at. They got $800 million in cash on their balance sheet. You'd be looking at these businesses at this point and saying, they're worth looking at to own in the portfolio.
Right. Makes sense.
Yep.
Okay, it's time for Ben's charts. Let's get them up here. I just can't wait. I got a hankering for some charts.
Nice.
How many you got for us
Nice.
today?
I think 4.
Keeping it tight heading into the long weekend, eh? Just can't wait to get out there on the knee board. I don't know.
Hey, like from the 90s, the
Yeah.
knee board from the 90s.
The knee boarding.
Yeah. Do you see that?
I can see it.
Okay, I started at the wrong place. There
Oh.
we go.
Okay, yeah, we were talking about this today.
We were. So it's a big milestone, as you told me today for Hart Investment Group. As all of you know, we've been posting charts now for a while, and Scott said we reached 500 charts with this one today.
This was the 500th chart. So that's yeah. For everybody's viewing pleasure, you've seen 500 charts. Congratulations.
Exactly. But if you're not seeing them, where do we put them? Where's the best place for people to look and find them?
Oh, definitely on the daily. So you've been getting emails. If you haven't been, let us know, or check your junk mail, because we send out emails every day. And it now links to the blog, which is what has a direct link to that as well.
Yeah. Daily Heartbeat. Is that what it is? Dailyheartbeat.ca.
Dailyheartbeat.ca.
Okay, perfect. So good. Yeah, let us know if you're not getting it. But yes, 500 chart. I mean, I think this is going to be a huge battleground for AI, though. ChatGPT or PT, excuse me, and Bard. Bard is Google's version. Certainly, I think Google is going to have a leg up here. From the perspective is all their data is going to be real time. So it connects directly to the internet, where ChatGPT is data, stored data effectively on servers. So I mean, there's pros and cons, but I certainly think Google is going to have a big advantage here. It is not available in Canada just yet, but I think that'll be interesting and exciting to see how that works and how it plays out. So we continue to watch this space pretty closely. So as I talked a bit about retail sales, this is Canadian retail sales. So, you can look at the US data as well, which it had in the post yesterday, in the daily email yesterday, showed the US retail. This is Canadian retail. So again, continues to show slowing activity in the retail space. Another reason why I think that the Bank of Canada does not raise rates, they stay on hold, continue to stay on hold. So retail sales numbers continue to tick down in Canada. And so, as I talk about kind of the consolidation, and really what our objective is always to do as investors, and for you, is to look ahead. What's coming in front of us, and what do we want to do with what's coming in front of us. Right now, I think it's pretty clear that growth and inflation is slowing. You can argue about how fast and why and what's going to happen to rates short term, but I think from a medium to long-term perspective, we got to think about what that has from an impact. And so, we look at this particular chart, which is North American fertilizer prices, and then CPI and food. So the white line over here would be the fertilizer prices. And so, as an investor, you look at it and say, okay, what is the likely outcome now from here? And what has happened to stocks that have exposure to fertilizer from here? And so you'd look at a company like Nutrien, which is down about 50% over the past 12 months, which falls in line with these charts that you look at. And then you think about what's likely to happen with inflation. And I think I said on the weekly last week is, the only food that's inflating is rice right now. Everything else has been in a deflationary spiral. And so we'd look at this and say, okay, what's my view? I think rates come down. I think the central banks and governments of the world at some point in the not too distant future are going to have to do what they do, which is reduce this restraint in the financial system. And then likely what happens is we get reacceleration and such. this is also a risk of what's happening in the world from a war perspective. You could see a shock there. I don't think it's happening tomorrow, but certainly from a positioning perspective, it's worth thinking about what do I want to do, what do I want to own right now. I've put this chart up many times, I guess, over the years, and really just trying to think about positioning. And so if the view is such where I think the economy is slowing and inflation is slowing, then I'd say, how is the market positioned for this, and what happens if I'm right, and what's going to do well in that backdrop? And so we face an interesting time right now where we look at this top of this chart, which is the S&P. And so you look at kind of what's been the kind of max positioning from a short perspective, like how short are the non-commercial positioners. So this would be institutions and such of the world. So you got a massive short position in the S&P. It's a bit odd as we get into the top of this cycle. And then we look at the NASDAQ, and you're starting to get closer to max long on the NASDAQ. And so you have kind of big short position on S&P, big long position on NASDAQ. And then we look down into the bond world, which I think is the most sensitive to what happens to the economy right now. And so if I'm right, the economy is slowing and inflation is slowing, then bonds should have a nice run over the next 6 months. But then you look at the positioning of the market, and you have effectively max short positioning on the 10-year, the 2-year, and the 5-year. And so if you ask, these charts are from Hedgeye, Keith McCullough's research. And so, his view is obviously you want to own all of those. You want to own that stuff right now and buy them. So the market's positioned against this. At some point, as the data continues to come through and growth and inflation slow together, you get a pretty big reversion mean trade, which, if you went from a massive kind of 700,000 contract short to 200,000 long, that would cause a significant rally in bonds that you own that are 10-year in nature. I'm going to say your rally is probably somewhere between 15 and 20% returns in that period. So I like to look at this just to see how things are positioned. So this is a visual of what it looks like. So this is, if we look at it, S&P 500 speculative positioning. So it shows max short position, I'd say, since 2007, 2008, when we went into the great financial crisis. And then again, as we look at the treasuries visually, this is the shortest that non-commercial short positioning has ever been. And so, when you think about it, you think this continues to be a good opportunity to continue to stay with that high quality exposure to bonds, given what we see is happening in the economy. And just from a last one, I know we talk a little bit about the economy, inflation, talk about rates, talked a little bit about AI at the outset. We've been covering ESG now for a few years and trying to give you updates on what's happening there. Still think it's a major piece for investment as we go forward. As for an interesting website that I found this week, it's called decarbonfuse.com. And so this covers a pile of publicly traded companies. And you can go in and drill down. You can look at the companies, saying, what are they doing? How are they committed to making ESG work for them? And you can take a look at a snapshot, look at all the properties they have. So Cemex is a company that I just put a snapshot on. It covers all of their properties. But if you know Cemex, it's a Mexican company. They make cement. Effectively, it's the grain or the sands that are used when you make cement. So Cemex is a snapshot. It gives you a sense. What are they doing? How are they contributing? Are they positive and negative? Cemex is pretty aggressive that they want to be carbon neutral by 2030, which is 7 years from now, which was quite short compared to a lot of the companies. So it's an interesting view. Institutions have started to use this type of research in their analysis when they're investing in companies. Just another place that we try to pay attention to what's happening and making sure we're up to speed with what's going on in ESG. So that's it for the charts today.
Great job.
Mm-hmm.
Gotta get myself back on here. There we go. Okay. All right, good job. All right, so what's in the crystal ball? What are we seeing for next week?
So, well, not too much happening from an economic perspective. We're still kind of in the last little bit of earnings, so we'd see a few more companies have earnings next week. I took a look just as we got on today. There wasn't really any big names that that jumped out at me. So we continue to watch that. You know, I continue to follow the Hedge Eyes research to see what they're thinking and saying. You know, they still think we're in that quad 4 narrative where growth and inflation are slowing together. So continue to pay attention to that. But, you know, from my perspective, it still looks like we're seeing bottoming in a lot of these things. And it's a strange dynamic where the market is right now, because S&P and the NASDAQ are quite high, but the smaller areas like the Russell 2000 and such, you know, Russell's down about 10% year to date. So, you know, these are kind of capitulatory events that happen in market cycles. So we continue to watch that. And then we have Bank of Canada coming in early April. So we'll see how the data continues to come out from there.
Okay. Awesome. Any parting comments?
Well, I think the last thing, which we'll probably send some more information out on, but we talked about the first-time home buyers, the new savings account that is available to individuals. And so, you know, I think this is a unique opportunity if you're a first-time home buyer, certainly from the perspective that you need to actually open them to get credit for them. So different with the TFSA, where the TFSA accumulates no matter what. With the first-time home buyers, you actually have to get those accounts open. So even if you don't use them this year, you know, for your kids or your grandkids, you know, they have to get them open, even if they put $100 in them, so that they have the $8,000 room that's allowable each year in order to accumulate that over a period of time. So the first-time home buyer is super interesting. We're going to provide more content on it and a little bit more details. And so I'd expect you'd see an email from us in not too distant future on that. But that's going to be a great tool for people looking to buy houses.
Yeah, great point. Yeah, we expect that to be a big thing in our group. Okay, everybody. Well, that's it for us. Have a great long weekend, and we'll see you next week.
Sounds good. Thanks. Take care.